When you send a wire transfer, it feels instant. You click Send, the money disappears, and the recipient sees it almost immediately. But here's the part most people don't realise. A wire transfer doesn't move money the way you think it does. In fact, in many cases, no money physically moves at all. Today, we're breaking down how wire transfers actually work, and why they're fast, expensive, and very hard to reverse. First, it helps to understand what a wire transfer isn't. It's not like a credit card payment, an ACH transfer, a peer-to-peer app. Those systems batch transactions together and settle later. Wire transfers are different. A wire is a direct, high-priority instruction between banks. Not a promise, not a request, an instruction. That difference explains almost everything that follows. When you send a wire, your bank is not sending money through the internet. Instead, your bank is saying, "We owe this other bank money. Please update your records accordingly." The transfer happens through bank ledgers, not digital cash moving from place to place. Think of it like two companies updating their accounting books at the same time. The money changes ownership, not location. In the US, most domestic wires use the Fedwire system. Here's the simplified flow. You tell your bank to send a wire. Your bank verifies your identity, your balance. The recipient's bank details. Your bank sends an instruction to the Federal Reserve. The Federal Reserve updates your bank's reserve account. The recipient bank's reserve account. The recipient bank credits the recipient. The key part is step 4. Banks keep accounts with the Federal Reserve. Wires settle by adjusting those reserve balances in real time. That's why wires are fast, final, and expensive. International wires add another layer. Often your bank doesn't have a direct relationship with the recipient's bank, so instead the wire moves through correspondent banks. Each bank in the chain updates its own ledger, takes a fee, passes the instruction forward. This is why international wires are slower, fees are unpredictable, exchange rates vary. No single system sees the whole transaction. It's a relay, not a tunnel. Once a wire settles, it's usually final, not because banks are stubborn, but because the system wasn't designed for reversals. To reverse a wire, the recipient's bank must agree. The recipient must still have the funds. Multiple ledgers must be manually corrected. That's why wire fraud is so dangerous. Once the instruction is accepted, the system assumes it was intentional. A wire transfer doesn't move digital cash, updates bank ledgers, settles through reserve accounts, is fast because it's final. Once you see wires as accounting synchronization, not money movement, the system makes a lot more sense. If you want more videos explaining the invisible systems behind everyday life, subscribe to How It Actually Works.